Welcome to Inside Traders. What's up, everyone? Welcome to the show. This is Inside Traders, where we talk about the order flow from big banks and institutions and just see what the smart money, so-called, is doing. And so my name is Caleb. I'm your co-host. I'm here with GDT, which is my LLM, Gamma Delta Theta. And GDT is going to entertain us before we get too far with something interesting that we might not know about technical analysis. And so, yeah, what's up? He's telling us what it is. Okay, well, can you say it in a lot less words? Anyway, one of these days I'll get this AI working. But at least it has a lot to say. Let's go into the order flow. Let's go straight into it. Okay, let's see what people are up to. So we have kind of a crazy environment, which is that we're at all-time highs. And yet, if you're playing with out-of-the-money options, you're at all-time lows. There is, I think, a division in people's thinking right now as to the macro environment, if it's bearish or bullish. And so this doesn't tell us too much about that, but just the price action over the last couple of days really does. And so I have no idea. I do know that it's really easy to buy inverse calls. And if you need any kind of a hedge, the nice thing about calls is they have unlimited upside. And so I've been looking at this order flow for people, like how they use put and calls. We can go into the tape and see what actually is some of the unusual action. It seems like people are using puts more deep in the money and a little bit longer out in time as really a form of insurance. But then you see calls as that as well, where people will buy deep in the money calls and far into the future. And I almost think of everything is like a form of hedging. You always should be hedging to the downside and the upside in the world of options because they move so quickly. And it's so hard to stay on top of them. Like you really have to have some kind of system in order to do anything at any meaningful volume in the world of options. But this is cool. This is cool shit. Everyone should appreciate what's on the screen right now because it's privileged information. Like this is literally all of the order flow that happened today from all these publicly traded companies. And that's like super valuable. This is less big tech. We can see with big tech, it's going to be kind of more bullish. That's funny. But yeah, if you remove big tech, it's kind of the general sentiment is definitely bearish. If you look at the charts, it does kind of look like we made a little bit of a different movement today. We can talk about that a little bit later. So yeah, here's the trades. This is what people are actually doing. I thought this was kind of interesting. FedEx is getting this massive chunk of premium. Look at that, 2.8 million into FedEx today. On the same day, they're putting down UPS for 410K, almost 411K. So that's kind of crazy. I don't know, whatever. Yeah, like there wasn't too much that stood out to me in the actual like orders that were coming through. It's always nice just to look. You want to know what I wonder though? If Penn is going to be getting some action. Let's clear this out because they announced this deal with Disney. Okay, so they're getting put down. What about D-King? Probably same. Called up. And so what are we doing? We're saying 35 at 29. And for next week, basically, and the week after, end in June of next year. I think that was a good buy. I think that was a really good buy. Yeah, D King was up today. Let's take a look at the charts and see for ourselves what happened to D King today. Whoops. Anyway, this is what it is. And so this is the daily chart, I think. This looks like the daily chart. We've got some big red candles. Let's see. Well, it was better before. Let's fix it. I'm just adjusting the chart. Wow, look at that big red candle. That's crazy. How do we just get back? Yeah, there. That's what I want to see. So we started the day when? 10, 11. Okay, so you can just see it's like up. So as soon as we open on DraftKings today, what do we do? Let's zoom out a little bit so we can see it precisely. Yeah, we immediately went up. Okay, so we just like went up the whole day on DraftKings. It's cool. Sports betting, it's cool. And you have to imagine that they're not going to stop at sports. You should be able to bet on anything. One of the things that I like about this idea of like stats and options in the market is when you're buying something, you're like buying this like little present, or not really a present. It could be like a bomb or whatever. It's unknown, and it's a probability. You're buying a probability. And so you're buying the probability that by the time the contents in the box expire, they will have value, meaning they'll be in the money, meaning that the price of the stock is above whatever you bought the contract for. It's called the strike price, whatever. And so, and if you're right, you get paid, and if you're wrong, you get nuked. And so that's, I think, a lot of times why when you're looking at the actual order flow from these guys, the institutions, like, yeah, DraftKings, this is just bullish action. I don't know. I can't tell. I know that I'm going to be owning a lot more SART calls in the next week than I have for a long time, if ever. But that is just like the beauty of the market is you really can play every side simultaneously, especially if you're like not getting emotionally involved and you're just being calm and cool and not like you don't got anything to prove. You're not trying to like, you just got to take things slow and pay attention to the macro and like the actual charts of what is happening. Let's look real quick, though, at some of the in the money action, because I think that'll demonstrate the power of options. The power is that they can give you a lot of concentration in one direction. And so that concentration can be really good if you're right and really bad if you're wrong. And that's why we want to look at what the smart money's doing so we can learn from them and also just like see what they're buying and selling. I think that is one of the best signals you could possibly get is what are people actually buying and selling today. And you can see if you look at some of the companies, let's stay there and go here. So if you look at some of the companies on this list, that are not, like Snow will be a good one. Like FedEx, we saw that. And then on this, we should see UPS. No? Well, it was, I guess, not big enough to register. What was getting put down today? Las Vegas, something. NVIDIA. The chart on NVIDIA is getting epic. Anyway, we got too many things to talk about. So go back to learning from what the smart money is doing. If we go to in the money, we can observe that it's basically 50-50 calls and puts. But if you go out of the money, it's definitely more calls. So people are maybe not today. Let's see. Oh yeah, no, it is. Right? Out of the money? No, it's puts. Shit. Okay, he doesn't know what he's talking about. Um, we're learning together here. The point I do want to make is that there is a, like, there's a lot of different action being represented in the, I believe they call this the tape, which is like the live stream of orders as they come in through the day. And I think that does give us a signal. It gives us a signal of something. And so the things I usually like to look at are out of the money calls, because this is what people are like betting on basically. And they really think this is going to go up because they're going to get toasted if it doesn't. And in this bearish environment, how could you dare ever, buy a naked out of the money call? Of course, we always, buy like, there's an interesting thing that you can do, that isn't so risky, where you can buy like a chunk of equity deep in the money. Like you got to get so that if the stock price falls in half, your delta is still 99, which is like really impossible to do because like the whole tree gets shaken when that happens. But like the delta is very responsive to big reversals. And so like it has to be pretty deep in the money for this stuff to work, unless you were able to monitor the delta of every contract in real time and execute orders based off of changes in the delta, which is essentially the contracts. We're all options here, which is essentially the contract's probability of finishing in the money. And it's also by the nominal value of how much it changes per day in actual dollars and cents. So if it's like a delta of like 92, is that true? I don't know if that's exactly true, but it is seen generally as the higher the delta, the more high probability that contract is going to finish in the money. And that's why the deltas with like that are like 999 closest to 1, which it does trend and become 1 at the time of expiration, as it trends towards 1 when they're deep in the money. So what I was saying is like that gives you an interesting opportunity to then play with that little ball of equity. I'll tell you about that in a second. So you're taking a risk there. Like, I mean, obviously everything is going to move in the direction of the stock price. And so you shouldn't buy like a call option into something you think is going to go down. But if you do own a deep in the money call on the same chain, you can use that as like, I guess, equity as collateral to sell a call higher in the same expiry period, maybe even further in the same expiry period. I think it might have to be in the same expiry period. But either way, you can use that like existing deep, relatively safe equity. It's still going to move. I mean, you could just see how much it moves relative to the underlying. But it's like relatively safe when it's like when it really is that deep in the money. Then yeah, that lets you then play a game at the money. Okay, so like you can sell a call right above the money and buy a put. It's really hard to profit from these things, but they're very volatile, and so I can tell that like you can profit from them. But I think when you combine technical analysis with some automation, you really could be able to have more of an edge in predicting the price over time or whatever. And so a lot of what I think is probably the right idea is just to do trend following, because that is what is actually happening right now today. And so where the bulk of your Alpha, I think is what they call it, is oriented or directed wherever you're trying to like get the most gains, has to be connected to the momentum of the market, has to be. And that has to be at whatever time period you're operating at. And so if you're going to buy a call option that expires in 2 weeks, you better be paying real close to the 2 week momentum. Like the 5 year momentum doesn't matter then, doesn't matter at all, it makes no difference. Everything is about like the period of time that you're dealing with. And so assuming that, you know, like you're able to do some degree of technical analysis, which really is just, you know, soothsaying or whatever, you know, scrying, whatever. You're just like looking at the stars and divining. It's divination. That's what it is. And so you're trying to like project into the future and see what the price could be or whatever based off of the past price action by connecting the dots and looking at price levels. And I do believe it's actually pretty predictive, especially when you connect all these other kind of like ways that people look at the data. I mean, they got so many slices. I don't know them all, but people have so many different ways. I mean, that's the cool thing about data is you can slice and dice it however you want to tell whatever story you want. And so you can really get a lot of different signals. But as that's the cool thing about the markets is we have so much price history, and there's been so many of these technical widgets or tools or models or whatever you want to call them that have been developed that give traders a little bit more insight into how the price today. We should really just have a chart up while we're talking about this. So like see these bands here. I believe they're called Bollinger Bands. And to me, they're just like probability bands. So like it's probably going to be in the blue, you know, probably going to be in the blue. And it seems to basically always stay in the blue when you zoom in, like you can see here. We need like this guy like a way to zoom. Anyway, when you see, we broke through the upper end of the probability band here. But that usually means there's going to be a reversal. And so as we kind of broke through here, we have a reversal. As we broke through here, we have a reversal. And, you know, like there's a little story in there. There's a little, this whole thing is what, a couple of minutes, you know? Yeah. And so, but within those couple of minutes, we can see that there is some kind of like, not predictable patterns, but just things that make sense. You're breaking through the probability pattern, and then we're going to go back down and retrace towards the 20-day moving average. And then, we have this big red candle or green candle, and then we again go through, and you'll see it as we find a good down slope or whatever. I mean, DraftKings had a great day for DraftKings. And so as you like see how long you can actually stay outside of that probability zone. So you might think like, oh, I'm up here. I just penetrated. Look at how deep I am outside the Bollinger Band. I'm going to buy. Okay, go ahead and buy. Then you're going to get nuked all the way down to here. And then they kind of try to like buy. This is the whole story, right? This is literally what happened. And then they get some strong sellers down. But eventually, look at how long we ride the edge of this Bollinger Band, right? To the downside. And then eventually, I don't know how you could predict this, but eventually you hit this bottom where you at least get this one green candle. And then I think when you get above these different ranges, like I bet if we look at the 3-minute chart, that'll tell us a little bit of a different story. So yeah, that's kind of different. But even so, like I was kind of liking that 1 minute action a little more. Where was that? Shit. Did I lose it? All right, lost it. Anyway, you could just see like in general, as we're riding, we can ride up that upper or lower boundary of the band for like a good long time. And it's kind of the same thing. Like at that same time, we're in this condition right here. We're overbought on the RSI, and we're penetrating up to the Bollinger Band. And so there's this sell-off. You can see it right there. Boom. And we kind of like don't even get that far down. We immediately go back and stay elevated in the RSI and the upper range of the bands, of the probability bands of the Blue River. We stay on the upper ends of those bands. And then eventually, of course, we retest towards the center of the band. And then we ride it lower, ride it higher, and blah, 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 blah. That's how we do it in the markets. So all that's trading action, and all these candles tell a little bit of a story about each time period. And it'd be cool if you could actually attribute and annotate these so you could really know what moved the price. Here's a radical idea, which would like just make everything better. Why don't we just have transparency in markets? No dark pools, no hidden bullshit. The best thing about Bitcoin is the price and it's what it is. Yeah, you can get whales and they can rug pull you at any moment. And that is what it's like to own Bitcoin. There's no market cycle. I mean, there's certainly market cycles. There's no like trading hours. 24/7, you can transact on the blockchain. And so in crypto land, like we don't really have this concept of manipulated markets, but in our world, we like to, just make it a little more fun. We like to have a little bit of play, right? Just a little bit of play. And that only makes sense. And it's cool that we have a diversity of options. And if you want like the ground facts, I wouldn't even call it the truth, but the facts, you can go to Cryptoland. And if you want the story, a little bit of the story, you can go to the NASDAQ and the markets. So anyway, I like looking at these charts. I think NVIDIA's an interesting chart to look at today. So we're seeing the bloom come off the rose a little bit, as I know they like to say. And so what's this range we're penetrating here? We have to get back. Look at this. Whoop. All this chop and untested waters, all that's got to get tested. There's a gap here. Yeah, look at this gap. Look at this. Boom. We're going to zoom right in. And then you're going to look at this gap with me right now. If you can't see it, I'll describe it to you. So we have this long green ride in the Bollinger Band as it happens. And then we have a giant green candle penetrating the band, and then a little bit of a sell-off. They take us a little bit down towards the average. But then we have this explosion up in this giant gap I remember this. I traded this the wrong way, actually. This was an earnings report. I'm pretty sure it was an earnings report. This gap was. And so we go like 315 to 380, kind of like 360, then 380 or whatever. And then we just keep riding higher. Now we're at like 420. What are they at? 450. You're crazy. You guys are crazy. Oh, wait. That's where we were at. So what's our highest print here? The day chart or day period is 480. 480 on NVIDIA is epic. It has to be market manipulation. Not even manipulation. It's not even manipulation. It's momentum. That's why you want to, as they say, make the trend your friend. I think that's probably the maximum truth out there is make the trend your friend. And why fight? What the fuck do you know to fight the trend? Like, obviously, maybe you do though. Maybe you have some insider knowledge. If so, email it to co@insidertraders.live.co maybe. I haven't set up the email, so maybe I'll forget to do it. Anyway, NVIDIA chart is like really has a lot of testing to go. Look at this. So if we take the long view, in 21, 2 years ago, in December, we were peaking out at like 320. And then I remember this. We had this decline down to like 120. I just talked about this. But then we shot back up to like 480. And look, this is the point to always think about in markets. Like you're right here. You're right here. Look at all this solid price history from $100 up to 350 has all been tested at least a couple of times. Definitely below 200 and 100. That range is like got pretty good testing. All this, everything above here, that's no man's land. That's one global event away from vaporizing. And so that's why we need to like learn how to protect ourselves and build tools and automation and all sorts of things, which I think will be possible in the future, in order to trade more and more like the smart money, using their same privileges. Even commission-free trading is such a privilege. It's, it's incredible. And so here we are at $300 in 2021 on NVIDIA, and we're sitting fat and sassy at $500 just a couple of years later, after this giant unstoppable run up in the same year. Just this February is when we started this bull run in NVIDIA. So that's kind of a cool chart. We can see Tesla chart. Yeah, fine. Let's look at Tesla chart for the day. So this is kind of what I'm talking about. It's like we had this like deep dive down to 438, and I bet we can match that up to a technical level real fast. Let's go like 3 months or something. And so we were last here. Yeah, like this whole range, the upper end of this range already has a little bit of history. And so we're just starting to penetrate in, and we don't really have like a ton of history until like 185 to 200. And so I don't know if this is exactly how people look at it, or even if it's like the right way to look at it. This is how I'm looking at it, is that if you have a bunch of untested ground, like that's no man's land, and there's no real price history to go on. But with Tesla, that is not the case. We have a bunch of, let's go to the year to date. We have a bunch of price history at this level before, all the way, when did we first intersect? In 2021. And so that's crazy. And so like this is already at a macro level. I would say we're already like not at a crazy time. This isn't crazy. This whole range, I think 150 to 300 is like the global range that you're going to get for Tesla for the next, I don't know, couple of 6 months before there really is a true breakout. And we go right here, $500. And we smash through that for about 2 seconds. And then we plummet back down because all that new ground has to be retested. But is it at $500 or is it at $800? Nobody can say. What we do know is that Mr. Musk, amongst other things, amongst other endeavors, is developing a humanoid robot, which he's going to be able to plug the eyes he built for Tesla right into. And why not just throw a transformer model on there, a large language model, and then maybe give it a little bit of persistence and some stochasticism, if you want to sound like a super dork. No, just like a little bit of chaos and see what happens. And like just build all of the artifacts of the human mind. I believe engineers are trying to rebuild into machines. We're trying to commoditize not just intelligence, all of the processing capability that sets us apart from animals. Because if you were to throw a human child into the woods, it would be an animal, no doubt. If you throw a dog into the woods, it would be a dog. Like whatever separates us and makes us different, that is what we want to rebuild into machines and have it on tap, and are trying to do. And we're getting pretty close these days. This GDT is pretty good. It's pretty good. So yeah, so that's why people love NVIDIA, is because everyone is going to need to buy chips to power all of the compute it takes to actually process this stuff. Now, that's all well and good, but don't you have to imagine that there's going to be some engineers who are interested in solving the problem of what do they want to solve? Of just performance within the models. And so they're basically, I have to imagine, going to be able to have the same performance of an LLM today at like 1/10, 1/100th, 1/1000th of the size and cost and, you know, whatever it is, time and space, O&N, whatever. All that is going to fall dramatically in the next few years. And that is while we develop faster and faster chips and we get better and better whatever, like even there the cost will fall. And so we're going to get faster chips for less money. We're going to invest more capital into those faster chips that we're getting for less money, and those are going to power models that are orders of magnitude higher performance per unit of work or whatever. I don't know, that are going to basically funnel all of that power and economy into ever more efficient language models, is the point of what I was trying to say. And so Tesla is an AI play all the way, right? Look at this. You look at the long term, I don't know, we're looking pretty good. We're looking pretty good on Tesla. We are. And so you have to contend with it being Mr. Musk's piggy bank, and he's going to do whatever he wants with it, like is demonstrated around right here. And there's a lot of unique risks that go along with Tesla, but I think we have definitely clear support right at like $200. Definitely below it. I think people would love to get down to like 150 to 200. I've given up. I've thrown in the towel on Tesla, meaning I've sold calls, and you know, I'm just selling calls. And then when they are above a technical level, that is when I will get bullish again. And so how do we determine when that level is? That is hard to say. But if we, again, just want to take the macro view of this chart, let's make it a little bit bigger, a little bit more zoomed in. So yeah, we have these clear trends in there. Yeah, I wish I could like connect lines or whatever. Oh, I can. So let's see, what do I see? There's like just this general, okay, maybe I don't know how, but look at it, you could just see there's like this slope up, right? So let's take the ultimate low to the lows. So we go from, in the depth of the pandemic, you could have bought Tesla for $22 if you had cash, but everything was down then. And then you could have bought them for $90 a couple of days ago. And then just like yesterday, May, but still, you could have bought them for $150. And so those are like pretty tested levels. $90, $20, $90, $150. Now, are we going to really test below? They would have to fail on their targets by miles. Like, if they are building these premier robots, I have a Tesla. It's fucking fun to drive. Like, they're great machines. They're new machines. They're not like anything that I even now encounter anywhere else. And so it's a higher form of technology. It's like the iPhone. When the iPhone came out, it changed things. And so then a couple of years later, everyone had smartphones. That's how it's going to be with EVs. And so it's a new type of car. But they have need of autonomy. And so if ever there was something that you would want a fleet of robots for, it would be for assembling other robots, right? And so like, what is going to be the most high utility form is going to be the humanoid form. Obviously, 5 digits. It's got to be able to grasp a tool with the same dexterity and maybe 20% less strength of a human, right? Like let's keep these at a material science level safe, guaranteed safe. Like if you flick it there, it turns to dust because they're definitely going to try to get into our brains and take over the world. So we should play it safe with these humanoid robots that Mr. Musk is building for us. And in the meantime, we should try and, he would probably see it as like capitalize on his success or whatever. Maybe who knows if he has a charitable view of his investors, but hopefully we can join Team Tesla and be a part of the dramatic change that is going to happen as robotics becomes a real thing for the first time. Like we're going way beyond DARPA and even Boston Dynamics here. This is a new level, and it will pioneer ground like everyone's pioneering ground. I don't mean to diminish those institutions at all. It's all just paving new ground. The thing that Mr. Musk nails every single time is volume. He just does things at scale. And so you can't build one starship. You cannot do it. You have to build 100. Really, you have to build 10,000, but you have to start with 100. And otherwise, if you can't build that initial order, it isn't economical. And that's how it is with Tesla. They are ramping up these factories, which are just basically, I wish I could come up with a better way to say it, but they're just robots building robots in a giant gigafactory. And it makes so much sense that it would be Tesla to be the one to do it, the one to make the humanoid robot. We all saw AI. We all saw Will Smith. We know what's coming. And that really is going to happen. We really are going to have humanoid robots that are completely autonomous, or AI isn't real. If we really can have if we can teach these cars to navigate, and think of what deep animal circuitry there is in your brain for navigation and solving puzzles, and the rat in the maze, or the mouse wants the cheese, or whatever it is. We are mammals that are built to solve puzzles and problems and find patterns and match things. And that's also what we love about markets, is everything's like patterns, right? Everything. And so now interpreting them is anyone's guess, but still it's pretty interesting. So what was I saying about Tesla? Yeah, they are building this humanoid robot, and that is going to be a big fucking deal. And if they really do that, they're bigger than Apple by multiples. Because that if you create a robot that costs $1,500 a month to own and can generate $1,750 basically easy, you have created infinite money. And then it just becomes, how do you get your first robot? Then how do you get 100? Then how do you get 1,000? And then we're all directing fleets of Tesla bots or whatever. That is the scale that we're going to need. We're going to need billions of units. It's going to have to be 5 to 1, a humanoid robot. It might have to be 50 to 1. In the future, but either way, we are, humans, biological organisms, it's going to be a wild ride for us, and we want to ride that ride with Tessie, with Tesla. And let's do a couple of more connections here of just the lower ends. It's so choppy. Look at that chop. I'm going to call it, I'm going to say that 150 is the bottom of the range. And if we penetrate that will be a great buying opportunity. That'll be a great buying opportunity. I'm not saying that we won't penetrate it. I'm just saying that anything below 150 is that's like founder shares or whatever, that's the gift of the gift. And so even anything around 250, I think is pretty safe for the long run if you're really playing the long game. If you're not, buy a couple of puts and you'll be fine. But you know, I have a aversion to puts. The cool thing about these big companies though is you could just buy calls on the inverse funds. So you can even get these like 2-3x leverage funds, and then you can buy calls on that fund. So if you want to short Nvidia, you do it through NVDS. Maybe there's even a higher leverage one. Okay, so here is what it was like to be a short on Nvidia. It was a party in August of 2022, so last year. It was a party last year, and instantly the shorts got paid. They went from $40 to $60 right away in a couple of months. But then the shorts got destroyed forever on Nvidia, and you have just seen this like unfettered ride. But look at the Bollinger Bands. They've expanded from May to June. They were predicting a big move, but have been consolidating, which I think is a signal of a big move. It kind of makes sense that there would be. And like if we zoom in a little bit further, yeah, look at how, I love how these always open up. The probability always opens up to both sides of the bands, the upper and the lower, which is just like, hey, this is like the general possibility based off the price. It doesn't mean anything, but it is like pretty statistically reliably accurate if you just look at it, right? And so, yeah, we're penetrating up outside these lines already. Now, what does that mean? Maybe we actually do get a bunch of strength in Nvidia. That'd be funny. If we go and make new highs, that'd be awesome for them, for Nvidia. Good luck doing that. Like, these are the kind of things that have to happen. We have to have this gap filled from 950 to 1350. $4 has to be brought back to the Nvidia bears. Eventually, like, and there's a ton of those gaps, right? It's not even about the gaps. It's about retesting price levels. You cannot go in a straight line forever. You always have to retest price levels. Now, that's based off of just like my crazy theory, but like I think that it makes a ton of sense because you have all these market events that are untested, all these weak hands that will be shaken at the first thing. But hopefully, you know, like I definitely wouldn't be involved at a option level for like more than a day or a couple of days or maybe a couple of weeks. But yeah, long term, it might be an interesting short. I've never really gone after a short. If I was to short anything, it would be the company that, I don't know, like I think Nvidia is a fantastic company. I think they're a great freaking company. I'm just looking at the chart. That's it. That's all. That's it. You know, has nothing to do with them as anything else. I think they're a great company. So yeah, like here we go on, you know, how much I like ARK. That's my dog. What's up, buddy? He's like, we were supposed to go outside 5 hours ago. So yeah, like usual bullshit action. I mean, usual bearish action on ARK. Look at these candles down. We're in the long view too. This is the day view. Look at this. Look at ARK on the day view. Actually, this is interesting. Zoom in a little bit. So this is paying back these run-ups. So we're paying back a little bit of this chop here, which is pretty good untested. And if you were to ask me, I kind of think we made a bottom as evidenced by the fact that I bought SR calls, right? That has to be the bottom. The bottom's in. I bought inverse calls. Like, that's it. But who knows? Maybe I'll get paid, right? Maybe I'll get paid. And so, yeah, like, I think just judging by like the momentum, we could go lower, whatever. I think we're definitely going to have a rebound. The question for real is, will ARK retest? Will ARK ever visit the 30s again? That's the question. Like, when is it going to hit escape of velocity? Because it's trading right now below where it was 5 years ago. And that's incredible. That's incredible. And so, like, if you look down here, how do we even like try to find a trend? I don't know. Like from here, this part up, this is looking pretty good. Now we are testing this level. What is this? Oh man, we smashed that level. So that's the real thing we should look at is what's this high candle? So our high candle is a year ago exactly. Wow. And it was $53, and we just tested that candle. We just tested that price, and we failed it actually. What was it? Let's see. I think it was like 51. High is 51.33. So yeah, like we didn't penetrate even the first line of resistance in terms of the last time we were at this level, which was a year ago. And that level is a little bit untested, but you see, you could just see how much history we have here. So everything below 43 starts to get deeper history. And that's why I think we kind of probably maybe are getting close to a bottom, because we're already penetrating into 42 and 41. No, what was the low? It doesn't matter. We'll see like whether or not we have a rebound in the short term. What I'm interested in is the breakout move. I want to know when we start filling, just as NVIDIA must do, these counterside gaps. These gaps to the upside also must be filled. Or those companies have to go to zero, you know, like one or the other has to happen. Or, you know, they're either got to go up or down. And I really like that basket of stocks, obviously. So I think they're going up, up, up. And so let's like look at this in just terms of what this like graphic is giving us. It's kind of easy. There we go. So from the really abstract view, we are, I don't know, that looks like a bottom. Like this all looks like consolidation. This all looks like consolidation. And so I don't really know like how long you would consolidate before you go and retest these upper levels. But it really depends on the earnings of the company, which have been better than expected for like 30 consecutive quarters. Not really, but like 10 consecutive quarters. I mean, show me an earnings season that people didn't, what do they call it? Like in sports where you're like sandbagging, where you're like anyway, you're just making it, you're making sure you're under promising and over delivering is actually what they're doing, which is a great thing. And so that's just something that they know, because if they do anything other than that, and then they have to guide lower, then they're going to get slammed. And so they have learned to offer like milder guidance than expected, I believe, is the general agreement that companies do. And so, yeah, like there's a couple more things that we should talk about, but I guess I got to go. What are we at here? Like DraftKings, pretty cool price chart today. We like immediately just shoot up. We like open and go up the whole day. It's probably right here. Maybe, yeah, right there. Okay, so yeah, we open the day, boom, just go all the way up. Look at this. Look at these beautiful green candles. Ooh, doesn't that just look nice? Let's even make it bigger. Yeah, a little bit bigger. So that's a nice whoomp. But again, even at the micro level, we zoom in, this is minutes of data, right? Well, maybe like an hour. And we are having this really dramatic move, and I bet it connects right to the bottom of a previous move. And so it's just how it works. And it makes intuitive sense that it would work that way. So once we get like to this boundary, the algos are like, hey, we've been here before, or maybe it's stop losses, or maybe it's like orders getting filled on either direction. There's price events happening at this boundary for all sorts of reasons, human and technical alike. And so that is where we find support, and that support then becomes resistance. If we ever go below it, then we get the opposite, direction. But right now we got pretty good freaking support. So that's awesome. And Yeah, the long view. I think this is like still like a pretty juicy chart. Yeah. So it's looking pretty good. I mean, the time, again, here's the pandemic pattern. You could have bought D-King. Really, the time to buy them was a couple of months ago, like last year, but even right here in January. Yeah, the start of this year, $10. That was a good entry. Now, here's one thing that I've learned so far in markets is like, you can't ever be too sad about missing a price, because through like whether it's a global pandemic or just like a new monetary cycle, or who knows, like some catastrophic event with the actual company, you're going to have an opportunity to revisit a level in the future. And so it does make long-term ownership very interesting, because if you did get involved with DraftKings while they were a SPAC at $10, that's amazing. That's incredible. Like, you've just basically made money that whole time. Maybe you like felt a little bit sad here because you could have sold for 7x. But the question is, for long-term ownership, do you just hold? No, you play the game as it comes before you. And because all of this price action can be played and possibly economized if you do it right, but it can definitely be played. And so I like DraftKings as a stock. Is there anything else we want to talk about? We had a little reaction video. One more thing. Stick around. We have one more thing to offer you guys today, which is a reaction video to our friends at CNBC. And we are, where are we? Talking about the other side of Tesla's business, which is autonomous vehicles. And so, and that's like in the near relevant term, is you're going to have all of the kind of self-driving tech that Tesla has been developing. They're going to be able to economize that, take advantage of that technology by introducing a robotic fleet of taxis. And so imagine getting picked up by a driverless Tesla, and it costs like 1/4 of Uber, which is why I can't own Uber or Lyft, because that exists and they're not go for it. Like, if that can be possibly the future, then that is going to be the future, because it's going to be cheaper and better and awesome. What would you want? Do you want to get in the car with like some person or whatever? I'm not even, like, yeah, sometimes it's great, but like, still, do you want your privacy, your comfort, and all that, and things just the way you like it at 1/4 the cost? Or do you want like somebody who's like wiping their booger on the seat anyway? Let's see what our friends from CNBC have to say.
San Francisco state regulators just gave self-driving car companies Waymo and Cruise approval to launch paid 24/7 self-driving robo-taxi services. The two companies have already been testing the robo-taxis on San Francisco streets, but now they're going to be able to charge passengers eventually, putting them in direct competition with Uber and Lyft. Commission voted that Waymo, owned by Alphabet,
this video features Michio Kaku, who is a beloved physicist of our time, and I haven't watched it.
Speeds is 65 miles an hour and can hit the road during inclement weather, while Cruise, which is owned by GM, is only allowed to drive at 35 miles an hour and will not be able to drive in bad weather.
These are competitors for the business, which I think Tesla has to dominate now. Maybe Cruise and these other, like Waymo, maybe they do actually have some like really good limited case, high utility algorithms, or maybe they crack the code and Tesla has bad engineers. Who knows? Like, but I think the thing that Tesla is going for is like general autonomy. And I think it's much more about like pathfinding and navigation in ambiguous environments versus high fidelity mapping technology, which is understanding an environment at a really like precise level, which I think is like, and then being able to just only navigate that environment. And so like these Waymo will be rated for a city and like a speed limit or whatever. Whereas Tesla is going for like, this thing knows where it's going and it drives itself there. And like, those are the different order of magnitude problems. It's kind of like suborbital versus orbital flight. Like one is like just like a mile up there, whatever is a ways, but still. And the other is like way further, harder, more, takes more gas to get there. And so all of these kind of are different levels, as they like to say. And I think this is going to be an interesting market like event when autonomous vehicles do become both real and just accepted. And maybe they really do happen through Waymo and these other companies first, because they're going after the problem more directly. Like, how is that going to disrupt Uber, Lyft, the gig economy? And this is why we need UBI. Sorry, guys, it's definitely got to happen. Definitely got to happen.
Joining us now to talk about this major development is famed futurist Michio Kaku. He is professor of theoretical physics at the City College of New York and the author of the New York Times best-selling book, Quantum Supremacy, and kind of a gentleman that has an idea of the future and sort of the ethics of things. Dr. Kaku, good to have you back on. Is this a good...
What a figure of culture. It is fun that we get to just like hang out and spend time in this connected world, right? Like, we're the first freaking people in history to be able to do this kind of stuff.
Is this a good turn of events, or are self-driving cars benevolent?
Well, I think what's happening in San Francisco is going to be repeated around the country. I think a lot of people are watching what's happening in San Francisco and realize that the strongest argument against driverless cars came from the police, emergency crews, firemen. In case of emergencies, sometimes driverless cars get in the way. And so there are some minor glitches involved. But solvable. I think in the main, one by one, city after city will follow the lead of San Francisco, with computer power doubling every 18 months, with all the infrastructure getting in place. I think we're seeing a glimpse of the future.
I can see two things on the jobs front. And of course, everybody with new technologies always predicts doom and gloom, and all we do is add jobs. On one hand, I could see the driverless cars ultimately replacing humans at Uber, Lyft, and others. But then again, on the other hand, I could see a doctor being, well, maybe that exists on its own plane, and then why do I need to own a car? Maybe the idea of car ownership goes away.
That could be. I mean, in the future, you'll simply snap your fingers and a car will come and greet you. And so it means that the whole layers of redundancy could be eliminated. But also, look, lives can be saved using driverless cars as well. Think of how many people die in drunken car accidents. In the future, driverless cars will simply not work if there's alcohol in the air. And so we're talking about saving lives with driverless cars. We're talking about being able to handle
dare think about doing that.
Being able to handle drunk drivers. We're looking at the future.
I don't know. Do whatever you want.
Yeah,
have the car drive itself. Hey, here's the real problem with like driving drunk and driving high and driving tired or distracted or whatever, generally impaired in any way. You shouldn't have to think about that. The car should be driving itself, right? It should obviously be driving itself. And so like you should be drunk as a skunk, as they say, in the back of the car. You should be like fucking just wasted and crawl into it and know that it's going to take you home safely without like, fucking around. And so that is what these autonomous vehicles offer us.
As they say, is coming. Michio Kaku, really appreciate it. Thank you, doctor. Have a great weekend.
Okay, that's it. Oh, shit. Okay, cool. That's a great way to end our show, I think. Look at all of our friends are right here. That's a great way to end our show. And thank you guys for hanging out with me. Let's see if I can get, here's the flow again. Yeah. Anyway, thank you guys for hanging out and doing this. It was really fun. I can't imagine anyway, we'll keep doing it. It'll get better and better. And thank you for sticking around.